Welcome back everyone to Season 2, Episode 6 of the 3K Challenge. Last episode, a lucky post-earnings jump on GameStop brought my account up to about 3,820, or just over 9% overall. My goal for this week is to finish the next Dank Trades episode. Not gonna lie, that's my priority because nobody is watching these 3K videos anyway. But for the 3K Challenge, I'm planning on spinning the GameStop wheel again and also putting some of this growing cash pile to work. So let's open her up here on Monday, September 12th. The market is having a good day and GameStop is climbing with it, so I'm over 3,900 again. It's a good start. First order of business is no surprise. I'm going to sell another GameStop covered call at my assigned price at $33. This will bring in a little over $50 in premium. I'm going to ask for $52 because that's apparently what Robinhood thinks is likely to get me a fill immediately. And I'll indeed get that fill right away. So GameStop is covered and I'd be totally fine with taking assignment at $33. In fact, I'd probably prefer it at this point. My next order of business is to use last week's $33 gain to buy more shares of QYLG, which is my long-term stash. I'd like to get back to an even number of shares, so I'll just buy 1.5 now, and that'll bring me to 11 shares in total. Everything looks pretty good so far. I'd like to get more of this cash involved this week, maybe lay on some spreads, so let's check the market's technicals. SPY is actually looking pretty bullish. RSI broke above 50 and it's gaining momentum to the upside. This low at $390 is actually a higher low than June's $360. It's a little early to call this a higher low, but it's possible. And MACD is my favorite indicator, showing a real good hook, and it looks likely that we'll have a positive crossover. So the technicals here are really bullish. However, I do have to keep in mind that we've got a CPI print that can throw a wrench into this whole plan. If CPI is good, I think we're going to really take off. If it's bad, and by bad I mean anything that misses expectations, then we're going way down. I have to keep this trade small so I don't put too much powder at risk of being donkey punched by inflation. I'll want to use a spread to limit my risk. So let's open SPY. It's up almost 0.75% already, so it's a good day. I'll go to trade options and flip to September 16th. That's Friday. I'm taking a directional play on this, banking on a good CPI print tomorrow. So I will sell the 409 put for $496. Then I will complete my put credit spread by buying the 408 for $488. This is a $1 wide spread, so it's not going to see much movement in price until expiration, or if the market just goes flying or absolutely drilling. But my max loss is going to be only $50 if SPY closes below 408. And that'll basically balance out with my GameStop covered call, so I'll be feeling indemnified. Let's keep our fingers crossed that Jpow got this inflation thing under control. Okay, so here we are on Tuesday, and it turns out I'm a dumbass. CPI increased by 0.1, which may not sound like a lot, but the market really wanted evidence that inflation was decreasing, and a year-over-year increase isn't going to do that. Not to mention this 0.01% is being compared to last August, which also saw high inflation. So the rate of inflation might be slowing, but prices are still inflating with little signs of slowing down. This is not at all what the market wanted, and things are not looking hot right now. I'm down 4% on GameStop alone, and my SPY put credit spread is pretty beaten up. I don't know why I didn't just wait until after the CPI announcement to make my trade, but here I am, sucking ass, probably going to continue to do so. I'm just going to turn off Robinhood for the rest of the day and see if this turns around. It's the beginning of the market and I've seen stranger things happening after a bad open. While there's no need for theatrics, after Tuesday's massive decline, the worst day in years, since the 2020 crash actually, my SPY put credit spread was pretty much illiquid since it was so far out of the money. The best I could do was recover $1, so that's a $49 loss. And GameStop, despite actually taking less of a beating than SPY, never recovered above 29 this week. So my covered call at the $33 strike expired worthless, and that creates a $52 gain. So on the realized side, a grand total of $3 hits my coffers. Post-inflation, that's not even enough for a pair of McDoubles. On the unrealized side, I'm down about $79 for the week, mostly because of Tuesday's bank run. That is unfortunate, but when the market drops 5% on the week, I guess you take what you can get. That would be the end of the episode, but that would be really boring, and I don't actually have time to do post-production since I need to finish the Dank Trades video. And my wife's car broke down for the 8th time, so we're going to go car shopping for a new one. Wish me luck. Okay, today is Monday the 19th, and we are getting into week 2 of this episode. We did end up getting an earth-toned 2019 Subaru Ascent limited edition with 22,000 miles for about $34,000, which is like 60% more than we spent on a comparable car in 2018. I can now officially say that inflation has affected my family. There's also no 0% financing anymore, and a new car would have been like $46,000. So my bank account is pretty drained and I need to do some stock market gravy to replenish. So let's try this again. On Monday morning, stocks are starting the day down a little bit, nothing too concerning, but GameStop is in the green, having a pretty good start out of the gate. Let's bounce over to Robinhood, and my portfolio is riding those GameStop shares to above 3,800 again. Let's see if we can get it to stick this time. My priority right now is to get my GameStop covered call open, and this early green will help me get a higher premium at a $33 strike. So let's go to trade options, and as usual, I will flip to this Friday and sell the 33 strike. This is the 20 delta, so that's just about one standard deviation away from the current price. In other words, there's something like a 20% chance that GameStop finishes above 33, and you can see Robinhood telling me there's a 16% chance it'll expire above my break-even at 33.58. The 20 delta is pretty low, but one day GameStop will rise a full standard deviation in a week, and I don't want to have a covered call below my assigned price at 33 when that happens. So I will keep wheeling this thing at that strike as long as it's feasible. I'll put in my sell limit at 57, and I had a little bit of trouble getting a fill, so my actual fill price will be 54. I want to try spreads again, but I am not touching anything until after Big Chungus Jpow decides how many bips he wants to throw at us on Wednesday. Most likely play will be to ride the post-announcement trend. It's not 2020 anymore, and Jpow's shredders are working faster than his printers. We gotta not fight the Fed.
With today's action, we have raised interest rates by 3 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible.
Well, there you have it. Interest rates will keep rising until Jpow believes we are poor enough to stop spending money on things, thereby ending inflation. The market loved it when he was talking. Strong performance of all stocks across the board, including GameStop. But once he stopped talking, we went right back into bear mode, and you can see it clearly here. Pretty wild action with this up and down whipsaw. I was looking pretty good for a few minutes, but suffered a nasty drop into the close. But let's roll into Thursday. I've got 2 trading days left, and it looks like the market still wants to trend down. Part of me says we're due for a dead cat bounce after so much blood, but I'm just not seeing that right now. I will enter with an at-the-money call credit spread expiring tomorrow so as to take advantage of this no-energy market. So let's open up QQQ and trade options, and I will go to tomorrow's expiration. I'll sell the at-the-money 280 call for $277 and buy the 281 for $226. This is a straight bet that the market will not bounce today or tomorrow. My max gain will be what I sell it for, so let's try 47. And this is $1 wide, so the max loss will be 53. I don't know what's going to happen over the next 2 days, so I'm just going to get out as soon as I hit 50% gain. All I need is a sharp drop and I'm gone. Well, here on Friday, and the market did take a dump again today. It recovered from the lows, but it never made it back anywhere near green for the day. My QQQ call credit spread expired worthless for max gain. But there's a problem. I paper-handed it like a punk bitch yesterday on this spike. $17 loss. It could have been a $47 gain, but I bitched out. I couldn't commit. I wasn't sure when the dead cat bounce was coming, and I thought this might be it. I didn't want to hold the short-term position, but, sometimes I just screw it up. So I'll run the numbers here before I talk about my penchant for making mistakes. $54 gain on the GameStop covered call, $17 loss on the QQQ spread. That's a $37 overall realized gain. But the huge losses on GameStop shares puts me at around $3,420 for this account. So I'm now at an $80 overall loss. I just can't seem to string together a first down because I'm having such a hard time with these short-term plays. So here's what I'm going to do. Going into next week, I'm asking myself, what do I think the market will do over the next 3 months? Well, Jpow told us, interest rates are going to keep rising, and as rates rise, bond prices go down. So here's the obvious play, long inverse bond ETFs. I don't know what's going to happen tomorrow or next week. Clearly I'm struggling on this short-term stuff. So let's try something new. I'm confident that the Fed will keep increasing rates, and the treasuries will march right along with them. I've also got enough cash here to go long these ETFs. So let's run a PMCC on an inverse bond ETF. I've got a few to choose from. That's TBF, or to be frank, which is unleveraged. Or there's TBT, Throwback Thursday. That one is 3 times leveraged. I'm probably better off with the unleveraged one, but TBF doesn't have many expirations available, so I'm going to put about half my cash pile into in-the-money TBT calls expiring in a few months, and then sell covered calls at low deltas expiring every week or 2. That's a PMCC. I know my shadow partner Mr. Ivy is going to kill me for using diagonal spreads as speculation instruments, but I want to be short bonds now, not sitting around wheeling GameStop while I wait for volatility to shuffle around. Besides, rates are going to rise anyway over the next few months. Maybe not over the next week, but over the next few months, I'm confident that these inverse bond ETFs are going to do very well. So let's get at it while the getting's good. Thanks for watching me lose money, guys. Inshallah, next week will bring better fortune. Don't forget to come hang out on Discord, and we'll see you next time.